Good morning, everyone. I have 10 a.m. I'm going to go ahead and give a brief introduction. Welcome to Flood Risk and Recovery Series, brought to you by Louisiana Realtors in conjunction with FEMA and Louisiana Department of Transportation and Development. We are offering this monthly series to provide realtors with helpful information and an opportunity to post questions regarding flood insurance, disaster preparation, and recovery. We hope this will help you in the field as you work with your clients. Today's session will cover Everyone is in a Flood Zone and Elevation Certificate Basics. Each presenter will provide a brief bio. Questions can be posed in the chat box. At this time, all participants have been muted to ensure the quality of the presentation. Thank you for joining us today. Please check out the remaining topics on our website at www.larealtors.org.
Very much, Angela. Hi, my name is Rebecca Dake. I'm a training and outreach specialist for FEMA Region 6. I want to give a big thank you to start with to Louisiana Realtors for inviting us here today, and thank you to all of you as participants. We look forward to hearing your comments, your questions in the chat. If you do require closed captioning for this webinar, there's a link that's in the chat, and Sandy, can you please post that again? If you click on the link, it will pop open a new browser, and that's where you'll be able to see the closed captioning transcript for this event. We are going to answer the question today, am I in a flood zone? And we're also going to talk about elevation certificate basics. So thank you. Next, Gil. I'm going to introduce our instructors here. So Gilbert Giron, he's our Regional Flood Insurance Liaison for FEMA Region 6. You can see Gil in the gallery there. Gil is our flood insurance expert for a 5-state region. He answers citizens' inquiries, congressional inquiries. He's always giving briefings and trainings. He loves doing this. You're going to love hearing from Gil today. And then we're also going to hear from Pam Lightfoot. She's our State Community Rating System Program Manager. She's with the Louisiana Department of Transportation and Development, their floodplain office. And LADOTD is our state partner. They're our state NFIP coordination office. So Pam is always helping out communities, and she's going to tell us more a little bit in this training and more if you join us on future trainings throughout this year, once a month. She's going to tell us more about the community rating system. It's a beneficial program that communities that are in the NFIP, if they're taking advanced mitigation actions, they can actually get a flood insurance discount for those positive actions they're taking in their community. So we look forward to hearing from all of our speakers today. And again, please put questions and comments in the chat. Thanks. Next slide, Gil. So just to give a little basis before we get into the flood zones and elevation certificates, let's talk just a tiny bit about what is the National Flood Insurance Program. So it's not just a flood insurance policy. Probably a lot of times, a lot of people think first, hey, you know, my flood insurance policy, flood insurance premium, they're thinking on the insurance side, but it's actually a whole program that's working in your community. So one way you can think about the NFIP is a 3-legged stool. There's a picture here. So what are the parts of that 3-legged stool? So one would be knowing the risk. So that's risk identification. So think about things like the flood maps, which we're going to talk about today, but it's also other flood risk products, and we'll talk about some of those today as well. And then another part of that 3-legged stool is floodplain management. So the NFIP, this is voluntary. Communities are saying, yes, we will adopt and enforce minimum floodplain standards, and we hope that they also go over and above for what's right for their citizens and their unique flood situation in their community. But the community says, yes, we adopt and enforce these. They can also do positive mitigation actions too. So that's a second part of the stool. And then of course, that part that we think about is the insurance side. So the NFIP, you can get affordable, federally backed flood insurance. And where do you get this? You don't buy your policy from FEMA, you buy it from your local insurance agent that partners with the NFIP. Thanks. Next slide, Gil. So Gil is going to tell us more about the maps, about the zones, And I think Gil's going to start off with a question for you guys.
Yes, thank you, Rebecca. My question to you, and I went through the video feeds. I don't see a lot of cameras on, but if you actually live inside of a floodplain, please raise your hand. Show me if you do. Go ahead and turn your cameras on and show me. I promise I won't hold it against you if you didn't. And all I ask is you have pants on. Okay, I'm starting to see some hands. Well, the answer to this question is everyone's hand should be raised because the entire country is a floodplain. A lot of people don't realize this. The entire country is a floodplain. It's just a question of what risk you will actually live in. You'll know in a FEMA maps or flood insurance rate maps, at no time will you ever find a place that says this area will not flood or this area is completely safe from flooding. We cannot do this. So there are no risk zones on the map. Everyone is in a floodplain. This is a question if you're in the zone X, which we call area of minimal floodings, or more moderate to high risk flood zones known as the special flood hazard area zone, zone A, zone AE, AO, AHV. Okay, so the thing about our maps is remember that they're a snapshot in time, and over time things can change. Okay, our maps are important for several reasons though. For one, it also tells us where mandatory purchase requirements come into play. Mandatory purchase is when federal dollars are used to back a mortgage. And it could be Fannie Mae, Fannie Mac, VA, HUD, any numbers. As long as federal dollars touch it, mandatory purchase is required. Mandatory purchase of flood insurance is required if that home is located inside a FEMA identified special flood hazard area. That's really important because some people may not understand this, and it's for the life of the loan. The requirement is going to be that the insurance equals the valuation of the home or the amount of the loan. That's really important to remember. And also, some things to understand is our flood maps are based off of modeling and engineering, which are the best that we can do at the time, but it's not a predictive measure of where floods will happen. We anticipate water to rise in these areas, but as you have seen, as the other states in our region as well, we're starting to see more flooding occur outside of special flood hazard areas, as well as inside. My very first disaster, Oklahoma 4222 in 2015, 65% of damaged homes were outside of my special flood hazard area. So although we do identify risk, that does not mean that is the only risk in that area. And as I mentioned, everyone does live in a floodplain. This is the question if you are in a area of minimal flooding or a moderate to high risk zone. So what is a base flood? Well, a lot of people used to call it the 100-year flood event. Well, we moved away from that because it caused confusion. Many times as the regional flood insurance liaison, before this I was in compliance, I got calls all the time saying, hey, my home flooded last year. I'm good for 99 more years, right? And I had to tell them that's not the way the engineering works. So we transitioned to what we call the 1% annual flood event. And it's 1% annual flood. And it's important we say that because it can happen any given year. And we need to articulate that. Well, our engineers at FEMA use modeling and in conjunction with on-the-boots engineer surveys. And we also work with communities who have the capability to provide detailed changes to the maps. Each community is supposed to annotate major changes of development and construction that could pose a change to the maps. Put all that together, and then we have the mapping analysis. The three-legged stool Rebecca discussed, which is my favorite slide, which I don't know why I didn't get it. Part of that, one of those legs is risk analysis. And they are the ones who determine the flood maps. And you know, they're the best we can do at the time. And we've gotten really good at identifying some of these flood risks. But it's important to remember that ultimately our firms, right, where the 1% annual chance are annotated on are meant for the purposes of rating flood insurance. It's a great indicator of flood risk, but it's not the primary purpose. And please just remember that. Okay, so let's talk about the flood zones. It can be confusing, and we have tried to make it easier to understand by simplifying the number of zones we have. Most people are familiar with AAE, VVE. Okay, those are the primary. We have transitioned from an ungodly number of different zone names to simplify the method. But the problem is we still have a lot of old maps out there that use the old identifiers, so we have to maintain them. So that's why you'll see AAE, HAO, A1 through A30, AR, A99, and the other identifiers you'll see on the presentation. But what we really want you to focus on are A, AE, V, VE. Those are primary, especially in Louisiana, because we have to worry about coastal coming in, velocity off the surcharge, off the wave action of the Gulf Coast. But we also have moderate flood hazards. Those are the B and X. We call those shaded X. Now, shaded X, we started identifying what was also known as the 500-year floodplain. Okay, so this is a non-regulatory floodplain. So unless the community adopts specific verbiage in the ordinances, it's not a regulatory. And mandatory purchase will not apply in these shaded X. But as we all know, just because it's a line on a piece of paper, that doesn't mean that the water is going to stop. So we want to educate the community and let them know the flood risk, not just the 1%, but also the 0.2% chance of flooding, also known as a 500-year. And we have what we call our area of minimal flooding. This is really important because I think this is misleading. We call it the area of minimal flooding because it is the area where we expect flooding to happen the least. But it does not mean that flooding will not happen. And that's where we really want to get our message across. The people who live inside a FEMA identified special flood hazard area have regulations they have to abide by. The community has to enforce, right? Well, those regulations do not apply to areas outside of FEMA special flood hazard areas unless they're specifically adopted by each community, okay? So what we're trying to say is people who live in the area of minimal flooding don't have the higher standards they have to adhere to, so that puts them more at risk. Now, why aren't they mapped into the special flood hazard areas? Well, don't forget, MAP is a snapshot in time, and over time we have population booms, we have development growth. For example, I like to use Houston a lot because it's really easy to visualize the amount of construction and population growth. Houston is the third largest city by population and size. And if you look at the map, Houston is a ring, outside of a ring, inside of a ring, inside of a ring, inside of a ring. But what most people don't understand is Houston used to be nothing but bayous and wetlands. So as they continue to develop in those bayous and wetlands, the drainage that they put in is only designed for that specific development project. But overall, it's not the master drainage that is needed to help alleviate the flow of water in those areas. So we have areas of minimal flooding, but once again, we're starting to see 45, 60, 65% of houses outside of the floodplain are also flooding. Now, we also have undetermined flood zones. Those are what we call Zone D. Well, why is it undetermined? Well, there's a reason. We have not mapped this because it's just not warranted for some reason or the other. Mapping a community is expensive. It's very time consuming. It can take anywhere between 2 to 5 years, depending on the amount of data that is necessary and the size of the community, for them to receive a map from start to end. Okay, so that requires a purpose for that map. So once again, larger cities or cities that have been outdated for 10, 15 years. But in D zones, those are normally just rural areas with very low population growth, very low development growth. In fact, we see a lot of them inside of military installations they use for their multi-purpose ranges, right? But we know there is possibly a flood risk. It's just undetermined. So in the few cases where someone does live or reside in a Zone D and they do get flood insurance, it'll be rated as an undetermined flood risk, which unfortunately is going to be a bit higher than the standard flood insurance. Okay, now how do we know the flood maps? What do they look like? I am happy to say that we have got to the point where most of our maps are digitized. The old-fashioned Z-fold maps, I mean, they work, but man, they were difficult to find a location. You'd have to use terrain association. You'd have to have 2 other maps just to help you find one location. But the digital footprints do come with color codes. And like all maps, they have a legend. But here, let's take a look at some of this because it's important to understand what digital format you're looking at. Now, if you take a look to the left side of the screen, you'll see a turquoise shaded area. In the middle of that, you'll see a Zone AE. That tells me, as a compliance and insurance specialist, that there's detailed information to be had in this general area. That's really important, not just for compliance, but also for insurance, and I'll touch on that why. But take a look at that map. You see those squiggly lines? And it has 74 and 73 respectively. Those are what we call base flood elevations. Now, those are on the firms, but it's important to remember that anything on the firm is rounded up. okay? And in the insurance world, we want accuracy to 1/10 of a foot, and I'll touch on that here in a minute. But if you look at the diagram on the left, that's what it looks like on the old Z map. You'll have a zone AE, then you'll have the cross sections B and C. They cross those areas, and we have the 71s, the little squiggly lines, you can't see them, but those are the BFEs in the areas. Now let's take a look over here to the far right where it says zone A. A stark difference in the maps, right? We see a zone A, it's properly colored, it's turquoise colored, so we know it's a special flood hazard area, but we don't have detailed information. Now this is where it's important for you to understand for you to be able to understand this and articulate to your clients that information is still needed. That information should be coming from the community. If the client has the capability to hire a surveyor that is also a professional engineer to determine a base flood elevation in that area, so be it. But the community is required under their flood damage preventive order or court order to provide community determined base flood elevations in areas that don't have detailed information. Now, once again, why isn't there detailed information? Simply, you see the area to the left where we have detailed information. That's a neighborhood. That's a subdivision of houses, okay? And then the A zone, you see, is just open fields. So with the costs associated with these, we chose to map the areas where people have their houses instead of an open field, okay? But it's important that the BFE be as accurate as possible. And we have a course that's called the 273. And part of that course, we teach floodplain administrators how to do simplified methods using either data extrapolation, interpolation, using other modeling from other federal agencies, such as the Army Corps of Engineers, to help determine a community determined BFE. As a regional flood insurance liaison, I have seen an elevation certificate without a community determined BFE. And then 2 weeks later, I have the floodplain administrator do a community determined BFE with an elevation of 0. Save hundreds of dollars to their citizens. So having an elevation certificate with a community determined BFE can save your clients money. Okay, so this is of interest in the area. We have flood zones and levee flood controls, okay? So zone AR, and I normally don't like to read from slides, but I want you to understand this. This zone designates an area where a levee is determined to be no longer provide sufficient flood protection, but is in the progress of being restored. Okay, so there's a lot of levee systems in Louisiana, and sometimes they may become uncertified because of not being properly maintained. A lot of people don't understand is to be protected by levee, there has to be a maintenance plan in conjunction with just building the levee. And now if that maintenance plan is not adhered to, and we find that the levee is not providing the level of protection it should, it can get decertified. Now this AR zone is a way to ensure that the same level of protection is available as long as the levee is to a point of repair that's almost recertified. Now zone 89 is the zone designates an area where a federal levee is under construction and can demonstrate adequate progress. So Army Corps of Engineers built and updated a lot of levees after Hurricane Katrina. So in this particular case, if a levee was far enough along where it provided a level of protection, for example, the levee has been built, but maybe not all the additional measures such as the pump house or the floodgates, all that stuff may not be finished, but it's to a point where it provides protection, then zone A99 will be applied. Now, both of those zones, mandatory purchase applies. Remember, in mandatory purchase is when federal dollars are used for a mortgage, flood insurance has to be purchased. Now, if the homeowner does not, then flood insurance can be forced placed by the lender. And as we all know, most mortgage lenders are really not apt for the best interest of their clients when it comes to looking for avenues to save money. So the rates may be higher. So let's talk about the Zone X reduced risk due to levee. Now, we saw a large number of policy drops in the Orleans Parish, Jefferson Parish areas a few years back because a lot of those areas were now protected by levee, which we considered X zone. Okay, now that may be the case on the map, but remember the 2016 Orleans flooding because the pumping stations went down. And they also found debris in one of the pipes. I think one of the debris was actually a crushed car. So those levee systems are reliant on other aspects to provide the level of protection needed to rate that protected by levee. So what I'm trying to get across is even though they may be protected by levee, does not mean there's not a flood risk. If any one of those measures were to fail, houses will be inundated with water. So just remember that even though there's a line on a piece of paper that says that it's protected by levee, does not actually erase the entire flood risk. Okay, this one is interesting. I like the way it really depicts how surface wave action plays a part on how our maps work. You look at the diagram on the left, you see the big V. That's our velocity coming in off the Gulf Coast, okay? We hit a line, that white line, boundary line, gutter line we call it, transitions from a V zone to an A zone. Then we hit another boundary line, transitions from an A zone to an X zone. Now, if you take a look at that blue line, starting on the left-hand screen, the middle of the diagram, it says BFE including wave effects. You see how that's a straight line coming in off the coast and then it kind of just goes down? Well, that is to simulate the wave action. And as you can see, that wave action is pretty substantial as we get closer to the water. Now, if you take a look below that, you see the dotted line is 100-year still elevation, okay? That would be the BFE in the A zone, okay? But you can see how important it is to understand that if you live close to water where we have wave action, you're going to be in a V zone. The V zone, velocity, or VE, velocity with elevation, okay? And we have to take wave height into consideration, and we do. The limit of moderate wave action is incorporated in that, and we have the 3 feet on this example here. But this right here is the reason why we do not allow slab-on-grade foundations in V zones. As you can see, that wave action which would just decimate anything that we have allowed on slab-on-grade. Not only that, because of that wave action, that soil is constantly moving. So you would have a severe soil erosion for a slab-on-grade foundation, causing major issues to the slab. So that is why every house in a V zone has to be elevated, piers, pylons, and posts to resist lateral movement, collapse, or flotation. And this right here really helps me explain it. Now, if you take a look to the diagrams to the right, you'll see the V zone. Now, remember earlier when I told you the firms are primarily for rating flood insurance, and how BFEs on the firms are rated, rounded up, and in order to get the proper BFE, we need a 1/10 of an actuary. We actually go to what we call a profile, except for our V zones. We take the BFE from our V zones directly from the firm. And the bottom right example shows you exactly what we'll get. So if your house were located in that top, in the zone VE with the elevation of 13 feet, the BFE for that area would be 13 feet. So if someone wanted to build right there, they would have to have a minimum elevation of 13 feet and plus any type of higher standards such as freeboard the community may have. So we know we run into issues when you start elevating that high. You have to start worrying about wind issues, but that's through a separate rider and a separate policy in its own. Okay. So let's talk about floodways. Floodways are important, and this is something that you as real estate professionals should really be well versed on, because it could have a big impact on what your clients can and cannot do if they purchase either a structure or property that is inside of a designated floodway. First, let me tell you this. A floodway is water will go. It has been modeled, engineered, and it has included a one foot rise that we see in areas that do not have detailed information, okay? So because this modeling is so exact, we cannot allow changes to this, okay? So if you're a home or if your clients actually purchase property or a structure that's in a floodway and they plan to make major changes, the costs to do these changes are still, well, first off, it's still allowed, right? If we didn't allow them to make changes or do improvements to land, that'd be considered taking. But there are separate aspects to the ordinance they have to adhere to. And that is, in a floodway, if you do any type of development, you cannot incur a rise, a 0.0 rise, okay? So if you're 0.1, just 1/10 of a foot, it's a rise. And in order for it to be approved, you have to engineer that rise out of the equation. That means you have to hire an engineer who specializes in water science to determine the best avenue to get that rise back to 0. Then you have to hire the construction companies to adhere to the engineering work. And all this is after submitting a conditional letter of map revision. It gets very complicated is what I'm trying to tell you. And in the end, will cost a lot of money if you buy a piece of land in the floodway Most of the time, those are going to be reasonable price, but there's a reason why they're reasonably priced, okay? Not only that, if you make changes to floodway, you have to make notifications to communities up and down. But let's talk about the floodways themselves. The floodway itself, if you look at the diagram in the top right, we just have a diagonal line. And that is an area that has not, the dots all over that tells me that has not been, some of that area has not been digitized. But look at the larger picture here, and you'll see that the diagonals have now been transitioned to the shades of red and blue. So that delineates the floodway, okay? Now, flood insurance between the floodway and the regular special flood hazard area is rated the same, okay? So it's not really going to have a big impact on the flood insurance cost if you live in the floodway. But it's going to have a big impact as the compliance side if they expect or if your clients want to do any type of development in the floodway. Still can be done. They'd have to contact their local floodplain administrator and meet all the requirements, minimum requirements from FEMA, plus any higher standards the community may have adopted. Okay, now let's start talking about moderate to low risks. This is when we start reducing our risk, but we never really remove it. Remember, the entire country is a floodplain. Okay, when you look at the maps, if you look at the top left, you'll see that it's turquoise, but it has dots in there, okay? We have the better pictures over to the right, the pretty straight circle, it says Zone X. Those are shaded X. If you look at B, that's what it looks like on the new digital firms, shaded X. Remember, that's what we call the 0.2% annual event, what used to be called 500 a year. So unless your community specifically adopts the verbiage in their ordinances, it's not regulatory. That means mandatory purchase doesn't apply. It means floodplain regulations don't apply. We encourage communities to adopt this because the flood risk is still there. Once again, if people look at this map only and they're trying to determine the risk, they are effectively saying that that white line on that piece of paper is going to stop the flow of water, which we all know is simply not the case. And then we have our Zone X, all that open space out there. That's area of minimal flooding. That is the safest area we have. But once again, it is not any place that we will identify as never flooding. Now, Zone X opens up a lot of possibilities, and so does Shaded X on the insurance side, because we offer what's called our preferred risk program, our preferred risk policy. It's the only policy we have, the NFIP, where you can tie your building and your content policies into one, and the premium is the lowest of the low. For example, for $700, $750 a year for a PRP, you can get up to $250,000 of coverage for your building and $100,000 coverage for your content rolled into one policy. It's really a neat product that we have. Those are only available in areas of minimal flooding, Zone X's, and as long as the eligibility of the home meets it. Eligibility can be based off of prior flood loss history. Now we're transitioning over to Pam.
Thank you, Gil. So now that you've learned all the flood zones, you're good to go, right? Okay, guys. Well, just in case you aren't, it's very important for you to know that you have a local point of contact, which is the local floodplain administrator, and that you and your clients can reach out to with floodplain development, flood zone, and map change questions. For each NFIP participating community has a different point of contact. So you'll need to seek out the floodplain administrator in the exact city, town, village, or parish for the where the structures that you're looking at is located. And you can find a list of these local contacts on our website at the link shown here. So again, as said before, DOTD houses the state's floodplain office, which is also the state NFIP coordinator's office. We can answer many of your questions or point you in the right direction, but many times we will have to direct you to the local community. For example, if someone calls our office at closing looking for a copy of an elevation certificate, we will not have it. We don't keep those in our office, but excuse me, we may direct you to the local floodplain administrator who may have a copy of it. Okay, next, Gil. Okay, so another great resource you should save to your phone is the FEMA Mapping and Insurance Exchange, or FMIX, and that number is 877 FEMA MAP. They have specialists who can help answer you and your clients' flood zone questions, map change questions, and flood insurance questions. They can help you interpret the maps and what all the zones and legends mean. It's also the number your clients can call to request a copy of their NFIP flood loss history. We can also pass this, you can also pass this number out to your clients. Next, please. Thank you, Gil. So we've talked about the different FEMA flood zones, and we've learned that flood can and does happen in every flood zone. But it is important to understand some of the reasons why flooding happens outside of the high-risk flood zones. Excuse me, I'm sorry about that. And development is a big one. Anytime something is done on one property or in one area, it's going to affect another property in another area, sometimes even another community. Development and changing land use will change the way water and storm drainage flows over the ground. And then second, there's weather changes. Slower, wetter storms that intensify rapidly before landfall are becoming more common. Add that to rising sea levels, and we are talking about drainage systems that can't handle the sheer amount of water, and swollen waterways will push water well inland. And 3, remember that Gil said the flood maps are based on a 1% annual chance event. So it's actually expected that larger events like the 0.2% or the 500-year flood will flood farther out and deeper than the expected 1% annual chance floodplain. Think of the August 2016 flood. It was larger than a 1% event. For our rivers, bayous, tributaries, there was nowhere for the water to go. And finally, Gil said this as well, maps are snapshot in time. As more development happens, the maps should be updated. Part of the local community's responsibility is to submit letters of map change. If they don't, and if they participate in the map revision process, you can have maps where the flood risk information is outdated and not giving an accurate, excuse me, sorry about that, picture of the real risk. Okay, next. Next, Gil.
Thanks, Pam. So I think a lot of times you might hear like in the media, you know, oh, data comes out finding there's actually way more homes at risk than just what is shown on FEMA's maps. It's really smart to take whatever flood risk data you can and use it. It's all information that you can use to help make decisions. It's information that you can help pass on to clients. Utilizing any and all of that is very smart. So using things like flood factor to, you know, hey, what does flood factor say? What do FEMA's maps say? If there's a difference, you know, take that into account. And if you're looking at data that seems to say that there may be more flood risk in an area, that's only good information that you and your client can use to help protect, you know, your property, their belongings. So there's lots of different data out there. FEMA's estimated BFE viewer is one as well, estimated base flood elevation viewer. So this is engineering data that's coupled with you know, high resolution topographic data. So it can actually give you, we talked about in those zone A areas where a base flood elevation is not shown, it can give an estimate on what the BFE would be in those areas. And again, that can be, you know, excellent for a community being able to use on an elevation certificate. But it also can give you a little like flood risk report. You'll see an image of that in the top right. So if this data is available in your area, use it, you know, share it, use all of this flood risk data. And then FEMA's Risk Rating 2.0, which is an update to the rating system for NFIP flood insurance policies. These rating changes are happening October 1st of this year. And this is going to give like a property specific a unique flood risk picture. So this is really going to be information that people can use to understand, what is my flood risk? You know, why am I being rated this amount? Thank you, Gil. Next slide. And Gil is going to tell us all about some of the basic things that you need to know about NFIP flood insurance policies.
Go buy one. Done. No, just joking. So the basics of a standard flood insurance policy, this is really important to remember. People in Texas are understanding this now after this big storm, the differences between homeowners insurance and flood insurance, okay? Flood insurance is a separate rider. It is not included in the standard homeowners insurance policy. And I'm hoping that people in Louisiana understand this by now with the number of events that they have to buy it separately. But let's talk about the standard flood insurance policy. It's a single peril policy. This one covers flooding. And I mentioned this earlier before when we were talking about the V zone, that we were protecting a house by elevating it up, and then we run into another peril, the wind, right? Well, that, once again, is a separate policy on its own, a separate rider. So single peril policy is important to remember that it only covers flooding. So we offer policies to residential and non-residential. So in FEMA's eyes, either you're a home or you're an other. An other could be anything from a business, it can be a nonprofit, it can be a church, it can be a fire station, it can be anything other than a primary residence, okay? So residential coverage, we have limits. The statutory amounts stop at $250,000 for the building and $100,000 for the content. So you could have up to $350,000 of flood insurance coverage to help you rebuild after an event, okay? Now for non-residential, we up those limits a little bit more, $500,000 for building, $500,000 for structure. I'm sorry, for content. But once again, those are for the businesses. And now what I really want to get stressed across here is renters can get content-only insurance. This is so important because we have seen time and time again, renters in apartment complexes not having any avenue to help them rebuild. Now, here's something to keep in mind and explain to your clients. Content, okay, so you take a house, apartment, doesn't matter what it is, you take it, you turn it upside down and you shake it, okay? What falls out is going to be the content. And you'll be surprised, people don't understand that they don't have the capability to replace their entire bedroom set, their TVs, their living room set, their couches, their clothes. All that is covered under content. And for, you know, a few dollars a year, depending on the amount of coverage a renter purchases, they could be fully covered. They can help them rebuild. Now, the apartment is going to be covered under the ownership or the landlord, however it is that they have it. But they're not going to replace the contents for their renters. They're going to have them on their own. So one of the big things I pushed for the past 3 years on messaging is renters. Be sure renters understand and know that they can buy content-only insurance. It's so important. But another thing I want to stress, and unfortunately we still run into this, we have, first off, in the flood insurance world, flood insurance agents have a large turnover, okay? So a lot of agents who are well-versed in floodplain management or floodplain insurance might retire or go on and sell their book of business to someone less experienced. And we get messages all the time that someone says that they don't live in a floodplain. Because they don't, their insurance agent said they are not eligible to buy flood insurance through the NFIP. That is totally mistaken. As long as the community participates in NFIP, any structure inside of those jurisdictional boundaries of that participating community can buy insurance through the NFIP. It's so important to understand that. Okay, so let's talk about some lessons learned from FEMA. Back in the 80s, we had some Midwest flooding. And at the time, we didn't have a waiting period in place. And it turned around and it kind of bit us because we had people buying flood insurance a week. Well, the Mississippi was flooding up north and it was coming down a river quickly. We had people buy a flood insurance policy and they were flooded within a week and they got full paid claim out. So we initiated a 30-day wait period. We don't want people to wait until they hear a storm is coming to buy.
Gil, your audio cut out there just for a moment.
Flood insurance. And after the storm is over, they can't. Can you hear me now?
Can you repeat probably just the last 1 or 2 sentences? Thanks, Gil.
Yeah, I'm gonna turn my video off because I got a unstable internet connection right now. Maybe that will help. So the 30-day wait is normally when you buy a new flood insurance policy. Now there are some exceptions for this. Now, if you are doing a close on a new building and mandatory purchase requirement of flood insurance, there will be no wait. It will be immediate activation of the flood insurance policy. There also could be exceptions in the case of wildfire. That really doesn't pertain to Louisiana as much, but we do have an impact some states in Region 6, so we do mention it. There could be a waiver that was issued to allow for a 0-day waiting period. An initial purchase of flood insurance as a result of a map revision. So this is the communities who may have a change to their flood maps, what we call a physical map revision. There'll be a 1-day wait if they have to buy flood insurance now. So we do offer some exemptions, but by far and large, there is an average 30-day wait before a flood insurance policy can be activated. But what I also wanted to touch on here a second, it's not really touched on, but the ability to take control over an existing flood insurance policy from one owner to a new owner. I'm dealing with a case now where the new owner was not informed of this, and they're missing out on newly mapped rates. So they came in as new business, which is post-firm and full risk rate. So the premiums are significantly higher than what the existing flood insurance policy was rated at because it was grandfathered in for continuous coverage. So make sure that your clients understand if there's an existing flood insurance policy to advertise it. It can be transferred over to new owners. Now let's talk a little bit about some diagrams I want to discuss with you here. How lenders can have impact on flood insurance. Okay, so let's take a look at structure 1. I think we're pretty clear that this is outside of the special flood hazard area, right? Mandatory purchase does not apply. Even if it was touching the shaded area, it still would not apply. However, lenders still have the capability to require flood insurance if they deem that it's close enough to the floodplain to warrant protecting their asset. Don't forget, this house still belongs to the bank until the last payment is submitted. We normally don't see this, so lenders want to be competitive, and people will shop around if they do have this requirement. But let's take a look at section number 2. Okay, part of the structure touches the shaded X. Now, anyone would like to tell me if this is a candidate for mandatory purchase? Just take off mute and say yes or no. Anybody? No one brave?
No.
Okay, outstanding. Because the shaded X is not regulatory. Remember that. Unless it's specifically adopted, regulations cannot pertain to this, but there's something you need to remember. The three-legged stool, we work together to make that stable, but sometimes we have different requirements, okay? And the different requirements on the insurance side is we go off the current effective maps. That X zone, even though there may be higher standards for the compliance, for the insurance, that would be rated as a non-regulatory zone. Mandatory purchase would not apply. Thank you, whoever responded. Section 3, we have a structure that is clearly in the, not only in the FEMA identified special flood hazard area, but also in the floodway, okay? Now remember, the floodway will have a big impact on compliance when it comes to development, but it's rated the same as if it's just in a special flood hazard area, okay? And section 4, we got half in and half out. So do we count it all out? The answer to that is we always have to go with the most stringent regulation. So since part of it is inside of the special flood hazard area, we treat the entire structure as being inside the special flood hazard area. Now section 5. So section 5, in this structure above the, okay, is this structure above the base flood elevation by natural grade? If it is, it may be a candidate for a letter of map amendment, okay? Now, a letter of map amendment is a little bit different than most letter of map changes because this can be done completely by the homeowner. So when we do our maps, remember, snapshot in times. So, for example, we're doing a city, and we're going to remap it. What we do is we take a blanket, and we spread out that blanket over the city, okay? Now, inside that city, there's going to be some natural spots that are higher than the others. But because of the costs associated with those, we cannot identify and remove every single one of those high spots. So what we do is we have a mechanism called a letter of map amendment for those who are inadvertently mapped into the floodplain to be removed. So we'd have to have an elevation certificate for structure number 5. If the letter of map, if the elevation certificate states that the lowest adjacent grade is higher than the base flood elevation, and that structure can be removed from the floodplain. Now, keep in mind, it's going to be surrounded by the floodplain, it's just a little bit higher. So we still want to have a coverage, but what this opens up for this individual structure is that it's now eligible for the preferred risk rate. Remember the rates that are in the area of minimal flooding, which are significantly lower than those inside of the special flood hazard area. So let's talk about the policies. According to the 2015-2019 census, there are over 1.7 million households in Louisiana. Now take a look at the current number of flood insurance policies, 502,000. Okay, I like to use Texas as an example. We have 26 million people in Texas, and we have less than 780,000 flood insurance policies. We are not covered in our coastal areas. And we understand cost is a factor of this, but by far and large, 1 inch of water can cost up to $26,000 of damage. So not having flood insurance will really put people behind when it comes to rebuilding. Less than 30% of households are covered by the NFIP flood insurance. Now, our numbers don't show private sector flood insurance. They're out there, and we encourage it if that is the best avenue for your clients to have flood insurance through a private sector, so be it. As long as the coverage mirrors the NFIP, it will be acceptable in most programs. However, you have to understand that if they do leave the NFIP, go private sector, under the NFIP, if they enjoyed some type of grandfathering or subsidy, they will lose that when they cancel their policy. So if they come back in, they have to come back in as post-firm full risk rate. And at the same time, private sector, we have seen payout, but we haven't truly seen a test of the private sector, such as a Katrina event, where we don't have an issue with them not paying. We have an issue with them rewriting flood insurance policies after an event. They can pull out of an area if they deem they have too much risk written in one area. They can pull out and not rewrite flood insurance. That means the homeowner has to go to the NFIP. And once again, if they enjoyed any type of grandfathered subsidies, those are no longer in effect. And keep in mind, all these are for residential. But let's take a look at the breakdown of by policies. This is really important. 53% in A zones, 46% in B, C, and X. So that is a good amount of coverage in the B, C, and X. But we would like to see that higher because once again, there are no areas that will not flood in our flood maps. And we have 1% in the V zones. Average cost to consumer is about $900. Unfortunately, we do have fees and surcharges that are added on top of the premium. So it can make your premium look like it's a lot higher, but the actual premium themselves are reasonable in certain respects, depending on flood loss history and your flood risk. So let's take a look at this. The number of claims in Louisiana, 461,277 when we leave the nation. Almost 1 out of 3 claims come from outside of high-risk areas. 1 out of 3. 35% of the claims from 2020 from Louisiana hurricanes came from outside of high-risk areas. The average claim in Louisiana for the past 5 years has been about $76,000. Now, I don't have the exact number for disaster assistance, but I believe it's anywhere between $6,000 to $7,000 for Louisiana, depending on the event. So you can recover a lot faster with an average payout of $76,000 for a flood insurance claim compared to $5,000 to $6,000 for a disaster assistance. Now we're going back to Pam for elevation certificates.
Thank you, Gil. An elevation certificate is a form that documents key elevation and flood risk information about your structure. It contains things such as the structure's flood zone, the height of the structure's lowest floor and machinery that could be damaged, like an air conditioner or a water heater. Excuse me. Any NFIP participating communities use the elevation certificate to make sure structures are built and rebuilt to local flood safety standards. It's required for all new and substantially improved structures in communities that participate in the Community Rating System, or the CRS. The CRS is a voluntary incentive program that recognizes and encourages community floodplain management practices that exceed the minimum requirements of the NFIP, and in turn, those communities get a discount on their flood insurance premiums. And flood insurance agents use it to help get an accurate quote. They are also used to support a request for a removal of a structure from the high-risk flood area or a letter of map amendment, Aloma. Next, please, Gil. Thank you. There are several ways to secure an EC for your home or business. First, ask your local floodplain manager if there's already one on file, or to see if an EC is included in the property deed. In a high-risk area, the developer or builder may have been required to get an EC at the time of construction. When buying a property, ask the sellers to give you a copy of their EC. If they don't have one, ask if they can provide one before settlement. And if you are unable to find an existing EC for your building, hire a licensed land surveyor, professional engineer, or a certified architect who is authorized by law to certify elevation information. For a fee, these professionals can complete an EC for you. That's me. On to the next person.
Well, it helps if I take it off mute. So thank you, Pam. So let's talk about tips for buyers and sellers. The elevation certificate is so important. I can't stress it enough. And I know there's a cost associated with this, and sometimes your clients may not want to have to eat that cost, but and tell them that the elevation certificate has a lot of good information that can help them make decisions in the future. It's not, the elevation certificate just does not just identify the flood zone and the base flood elevation. It provides their lowest adjacent grade, the highest adjacent grade. It provides the location of the machinery. All this can help them make informed decisions moving forward, especially if they can do a little bit of mitigation by elevating their utilities higher. So there's a cost, but yes, it's well worth the cost. So let's talk over here about tips for buyers and sellers of high-risk flood areas. Buyers, okay, because of the known flood risk, add the annual cost of flood insurance and asking price, okay? Let them know what the average cost is, and keep in mind, the NFIP offers affordable flood insurance, but because of the Big at Waters Acts in 2012 and the Homeowners Flood Insurance Affordability Act, HFIA, of 2015, our rates increase every year. It's a gradual incline. HFIA states that every flood insurance policy has to hit full risk rate eventually, okay? But it doesn't give a time frame, so there's a gradual incremental increase every year. For the past couple years, it has been about 5 or 6% increase, which is very minor. But unfortunately, we have started to see about 11 to 12% increase for the past 2 years. So they're more noticeable. But all flood insurance policies, the NFIP, are going to have this incremental increase, and it's important people understand this. Okay, we require the flood loss history from the seller. This is so important because only the current homeowner can request a flood loss history report through the NFIP. Now, they are sent out with a declaration page for renewals or when people first buy their policies, but it's only one time. So in order for them to keep their records on file, but then again, if you're dealing with a new transaction, most people want updated reports. So only the current homeowner can call the number that was provided earlier in the presentation. And that is just the start of the process. Like I said, the current homeowner has to sign an affidavit that they are the current homeowner, mail that in, and a few weeks later, you get the flood loss history report. But that is a great selling point, especially if there's no flood loss history under the NFIP. They can provide that, and that maybe give a little bit more easement to potential buyers. Most lenders require a flood insurance. Get a flood insurance quote well before closing. Now, I ask people to get 3 quotes, excuse me, not because of pricing, but because of knowledge and experience of the agent writing or providing these quotes. If you get 3 quotes and they're all pretty close, which they should be because they're all based on FEMA requirements and our rating guides, but if you get 3 quotes that are outlandishly different, understand that someone may not be knowledgeable to, my belief, take your business and write your flood insurance policy. Because a quote is that, it's just a quote. Once the underwriters review all the information and they determine that the information may not be correct, the policy will be rated off the correct variables. And unfortunately, I have seen people who got a quote for a couple $100 a year and the information was inputted incorrectly by the agent, and turn around after they've closed, the flood insurance is outside of their means by several $1,000s per year. Okay, and request the elevation certificate. If the seller have one. Now, here's the thing about the elevation certificates. Remember, our firms are a snapshot in time, and if you have an elevation certificate that's 10, 15 years old, some of that ground truth may have changed. It may be time for them to provide a new elevation certificate. And as a buyer, you can request that from the seller. Now, the sellers, if you're receiving a subsidized rate, transfer it to your new buyer at closing. And this has to be done. This statement of endorsement has to be done, an assignment from one policyholder to another, but it happens all the time. And consider mitigation project. Get with your local floodplain administrator. Pam mentioned earlier about having local access to your floodplain administrators. It's imperative that you foster a relationship between the floodplain administrators and the jurisdictions you work, and as well with the state NFIP coordinator's office. They can answer a lot of questions. They have so much knowledge and experience that can help you inform your clients to make informed decisions. Those mitigation projects can be as simple as elevating outside air conditioner units 2-3 feet. That could save money. Rebuilding areas with flood-resistant materials. Having enclosures in the V zones, enclosures that are not properly vented, having those vented. Those mitigation projects will save money and lessen the impact of flooding events. There you go. We're seeing provide elevation certificate again. You're starting to see how important elevation certificate really is. And disclose flood history. That's really important. One of the contributing factors for a preferred risk policy is flood loss history. If you have more than one flood, you could be ineligible for a PRP. So it's really important that the correct information is provided in the seller's disclosure for potential buyers. From moderate to low risk, once again, buyers, flooding can happen anywhere in the past 5 years. 40% of NFIP claims come from those. Getting flood insurance. Ask your local flood administrator if this area, even though it's not inside of the special flood hazard area, if there has been flooding in this area before. If the since mandatory purchase is a requirement there may not be a flood loss history report, but the floodplain administrator can tell you if the neighborhood is flooded. Inquire with the seller about previous flooding and require flood loss history. Starting to see how those are, we're repeating them over because we're stressing the importance of them. Now, sellers, you can transfer the policy at closing. Remember, it's a good selling point if you as a seller have some type of grandfather or subsidized NFIP policy. Make sure that's in the selling criteria that they can transfer this over at closing. And once again, the flood loss history is really important. And back to Rebecca.
Thanks, Gil. So we just have a few resources. Go ahead, next slide. So we want to point out, of course, some of these ones that we've already talked about. So the FEMA Map Service Center, this is where you can look up the maps, FEMA.gov, and floodsmart.gov is a great place you can send your citizens to. Next slide. And then a bunch of resources here for you. Look these up later. These are places where you can get kind of talking points for talking with your clients, but also more information to help you. Next slide, thank you. I think this is one more page of resources you can go to, including Pam's LA DOTD State NFIP Coordination site. Next slide. And then I know a lot of real estate professionals are savvy on social media. So if you are, you can go to agents.floodsmart.gov, and there's all types of pre-populated social media posts for different platforms. You can take the copy, just copy that. You have an image or a video, you can share that on social media. It's a really great, check it out. And then next slide. So just a reminder for everyone, you know, our partnership with you is so important. You guys are often, you know, the first talking to clients, talking to people, and we all know what happens after a flood event. You know, people's property, all of their stuff can be ruined, and the recovery that someone faces after an event it looks a lot different if they aren't insured with flood insurance. So we thank you for your partnership, for Louisiana Realtors partnership in spreading the message about flood risk and flood insurance. Our contacts are on the next slide, so go ahead to there, Gil. We are right at closing time, but I do have a question for everyone. I want you guys to answer in the chat, and then we're also going to be taking some of your questions that we saw in the chat. A copy of the slides is available in the chat, so you can just click on that link to the PDF and download it. There's a little blue arrow in the chat. So my question to everyone is, are you in a flood zone? And please answer in the chat. Or go ahead and unmute. Are you in a flood zone? If your clients ask, am I in a flood zone? Thank you. Everyone is saying yes. That's great to see. Excellent. Let's open it up for some questions. We are right at the 1 hour mark. We understand if people have to drop off if they have another commitment, but we also do want to get to the questions that people asked in the chat. Amy with Louisiana Realtors is also saying the recording and handouts will also be added here as well as on Louisiana Realtors website. So Amy or Angela, do you want to make any comments before we get to some of the questions and answers?
Rebecca, I think y'all have done a great job today. We hope that everybody who participated has found value in the information. I know I picked up a couple of very helpful resources and websites that you can go to. We want to make this a working resource. So as we do more of these sessions throughout the year, we want to go back and put these things on our website so that agents can find them. We'll also be sharing this with your local associations and your MLSs so that they could put some of these helpful resources and sites right into where you're logging into every day. And as you have questions or topics, certainly you can always reach us at info@larealtors.org, and we thank you for everybody's time.
Thank you. All right, so just a few of those questions. We had a question from Meredith for properties outside of city limits. How is it determined if that area participates? Gil, is there a resource for people to find out, you know, does a community participate in the NFIP?
The best way is simply to contact the community themselves. If you live outside of city limits, then you're in a parish jurisdictional boundaries. But if the parish doesn't answer, you can always look up a community status book. It's outward-facing document FEMA provides to the general public. You can do a search for community status book. Just put FEMA community status book in the search engine, and you'll be able to do a search by state and by parish. And it'll tell you if you're participating or non-participating.
Thanks, Gil. Catherine asked, if someone purchases a home with cash or a straight conventional loan, would their flood policy have the 30-day wait period?
All policies have a 30-day wait, regardless if they buy it with cash or not. It's a question of mandatory purchase applying in this area. If they paid for it in cash, no federal dollars were used, or a conventional loan without being federally backed, there may not be the requirement for flood insurance, but we know they want to be proactive and insure their investment. So there'll still be a wait.
Thanks, Gil. Catherine also asked, so buyers and agents can't call that number, the 877 FEMA MAP or 877-336-2627. So buyers and agents can't call that number to get the flood loss history. Is that true, Gil?
That is true. It has to be the current homeowner. The calling that number is just the start of the process. You call them, they're going to take your address and name. They're going to mail you an affidavit where you swear that you were the current homeowner. You mail that in, and then a few weeks later, you actually get the flood loss history report.
And a follow-up to that would be if the bank owns the property, is it still possible to, request that information? What if the bank isn't willing to share that information?
Well, the bank may own the property, but who initiated the flood insurance? That's a good one. But no, most of the time the bank owns the property, even if a homeowner, it's a mortgage. So, the primary owner is the bank up until the homeowner pays the last payment. So as long as the name of the flood insurance policy is the same as the person requesting it, they'll get a report.
And then Lauren asked, is there a tool or calculator real estate agents can use to quickly estimate flood insurance cost if you know the flood zone and you have the elevation certificate?
No, unfortunately, it's determining a flood insurance premium is a complicated process because there's a lot of variables outside of just the elevation and BFE that goes into play. Is it pre-firm? Is it post-firm? Is there grandfathering? Is there other types of subsidies? The flood loss history, all those go into play. So without each variable, we wouldn't be able to give a quote. So that's why FEMA does not have any type of a search engine, because we don't go off of private sectors may have one because they make assumptions on certain things. We cannot. It's not allowed.
Thanks, Gil. There was a question. So this is a situation where insurance was quoted at a certain amount. Let's say it's, about $2,000. But then when we got an elevation certificate, the premium went up to $7,000. So what could be some of the reasons for that, Gil?
Something triggered substantial improvement. Was the house damaged in a flood? If there was a renovation done on a house and that renovation equaled 50% of fair market value, it would now be considered a post-firm structure and it'd be rated at full risk rate. But without knowing the variables, I'm just hazarding a guess here. I'd need the elevation certificate, the declaration page, and why the reasoning of the rate increase, and I can make a better determination. But it sounds like a substantial improvement went into play, and for some reason, or something else triggered a post-firm rating.
And there could also be maybe a huge elevation difference somehow, maybe. I know we had a...
I'm sorry, it could also have been that they let their policy lapse. If you let it lapse for more than 30 days, well, more than actually 2 months, your policy will be considered a lapsed policy and a new policy be re-rated. It's so imperative that when you have a policy, you keep continuous coverage. You don't let it lapse, because if it was a pre-firm structure and they let it lapse and they came back in a few months later, it's now a post-firm, and you could see the price differences between.
Thanks, Gil. So if somebody was getting a subsidized rate, they let the insurance drop, and then that subsidized rate isn't available in the future. And then potentially just another situation could be if a survey finds there is, either utility, machinery, or living type of space well below the base flood elevation could cause a huge difference like that. So
unlikely. Also, each house has to be rated correctly. So if there was an instance of it being incorrectly rated for those years and it was just caught, no matter what the increase is, it has to be rated correctly. So you can see a substantial increase of that as well.
Awesome, thanks. I think we got all the chats, all the questions that were there in the chat. If anyone has any new, you can unmute or put it in the chat. But again, sorry, go ahead, Gil.
Yeah, there was one more about the length of a mapping process. Well, remember I said it can take 2 to 5 years? That's if everything goes according to plan. We see significant delays. A lot of times communities are not happy with the map, so they can submit appeals. And in Louisiana, we get a lot of appeals, which can delay the process for years. We can't move forward until the appeals have been addressed. A lot of these appeals have to be backed up by technical data, which they are, so engineering reports. So everything has to be reevaluated and reprocessed. So on top of the 2 to 5 years, you can add on 3 to 4 years very easily if you have a large number of appeals.
And we have another question. Is there a cost for a letter of map amendment or a Aloma?
The only cost associated with that is the elevation certificate needed to submit with the packet.
Thank you. All right, thank you guys. We hope that you sign up for the future trainings again, first Wednesday of every month on Louisiana Realtors website, and keep your questions coming in. What questions, what feedback do you have? We'd love to hear it to improve and be able to get you guys the information you need. So thanks so much for your time.
Thank you.
Thanks, guys.
Bye, guys.